Okay, welcome back to Digital Perspectives, everybody. I'm Brad Kimes. You can follow me on Twitter at Backup Bradley above at the top of the screen, and everything that we're talking about here. In fact, we're going to start on Twitter. I'm going to go over just a couple things here for us to look at. Get a little brush up on some of the news that's been sprinkling out here, kind of releasing. And believe me, there's been a lot of late, and it's hard to keep up with. So very grateful for the XRP Crypto wolves in the world, and DJ Peter Vass and Michael Val 5 Links. These people out here are just something else. And there's many, many more. There's many, many more. I can't name them all. But you know you guys are amazing, and we appreciate you so much. Okay. Let's start with this piece right here and go into the one that was just on here. So China's fintech giant Ant Group just launched a new blockchain, brand new Ant Chain. They are claiming to be the largest operating blockchain in China. Ant Chain supports more than 50 use cases, including shipping, cross-border remittances. Ripple's Partners Alliance may give way to Japan and Vietnam corridor. Michinoku Bank will begin to utilize SBI Remit's international money transfer services. The same SBI that's connected to Ripple. Yeah, that's right. The leg bone's connected to the knee bone. Come on in. Let's keep it moving. This was an interesting piece here. I did read this article and watch the video clip that came with it. IMF John Kiff said the technology supporting central bank digital currencies platform has existed for a long time. And he did say it. In fact, I will show you. This is John Kiff here. His profile, Senior Financial Sector Expert, Global Financial Stability Division in Monetary and Capital Markets Department. Now that is a title you can't say 5 times fast. Okay, so now coming to this. This is the actual writings of what was discussed in this video here below. Let me see if I can just give you a shot of this video really quickly, guys. You are going to want to hear John Kiff say that. And then we'll get on to another piece of information that just came out with Ryan Zagone. And I really think this sums up everything that's happening, especially in the last few days or a couple weeks here. This is getting so exciting. So let's start with this clip here. It's about 3 minutes. Let's just hear most of this.
Let's talk about access to the central bank balance sheet and what that entails. And it seems like we've had a lot of academic theories about it. And have we just been waiting for the technology to kind of catch up and make it feasible?
I think the answer to that one's sort of one of those yes or no type of answers, because like you say, the academics been talking about this idea. I think going back to the 60s. I think Milton Friedman is one of the famous economists who is a proponent of this idea potentially.
First of all, Milton Friedman was a genius, and I am a huge Milton Friedman fan. God rest his soul. Keep going.
But I think the technology has been there all along in the form of the same technology that commercial banks have been using for ages. So potentially in a very simple CBDC platform, central banks could just basically jump in and offer the same services as commercial banks.
Whoa! Now that sounded smooth, but central banks could come in and offer the same services as commercial banks. So this is pretty remarkable, because what he's talking about is the supply chain of payments. The protocol and the chain of payments, the way it normally moves, won't have to move that way anymore. The central banks usually go through a commercial bank to get their payment flows settled. So let's keep listening.
And for some countries, particularly those with underdeveloped financial sectors, maybe that's the way to go. We may get a chance to talk a bit more about these different business models later. But I think what has changed, and this is the sort of the yes part of it, new technologies like application program interfaces, the APIs, and distributed ledger technology have opened up new ways of central banks to operate with the private sector to offer CBDC. And I think what may have changed, if anything, is that it's more like the motivation side of things have changed. And when we scan the CBD commercial banks for the kind of motivations that are driving the new interest in CBDC, we look at things like the fact that in some economies, Sweden's one of them, cash is being driven into a corner, and and payment services are being dominated by private sector payment services. In the case of Sweden, it's something like 80 or 90% is controlled by one single institution that actually is at risk of moving the control of that payment system outside the country. So in that case, they and some other central banks are looking at CBDC to basically solve what we call monopoly distortion problems, because if a payment system has a monopoly, there's a possibility that it could use that monopoly power by offering expensive or not inadequate services. You also have single point of failure issues that you may not be able to regulate away, because you just got one big mega institution controlling all of the payment services. Also, the new threat seems to be Libra. We will often say reducing or preventing the adoption of privately issued currencies. That's what we say amongst ourselves in the official community. But really, Libra has kind of been a bit of a shock for many. That's got central banks thinking about offering a competing service. And also just the fact that some central banks are looking at CBDC to improve monetary policy effectiveness.
Listen very carefully to what he says here.
We haven't talked much about or anything at all about design features in CBDC, but you could have a CBDC that bears interest, a variable interest rate that could actually be used to work with an enhanced monetary policy.
Which also means that if you could have a bearer instrument that you could have an interest gaining rate on, you could also have one that has a negative interest rate on. Just wanted to drop that on you real quick on a Friday. Yeah. Okay, now let's keep this thing going, because it does get better. So let's keep this thing going here. Is it here or here? Let me see where I'm at here. Okay, right here. Ryan Zagone, who as of the 21st, when the CFPB rule came out and became effective, Ryan Zagone found his password to Twitter, and I am, very grateful for it. Ryan Zagone, formerly of Ripple, has done amazing work to advance the initiatives of Ripple and XRP. So it's pretty remarkable in the faster payment system. So listen to what he says here. This is pretty amazing. Ryan Zagone says, changes go slowly, then all at once in 1 week, the CFPB opens door to data aggregator rules, and FDIC.gov proposes fintech certification program. US OCC blesses crypto custody. Now, how about that? That about sums it up right there, right? That is exactly what we're seeing. And it is remarkable. You know, not too terribly long from now, the world of crypto is going to change in the way that we deliver the information in the news. Not too terribly long from now, there won't be a need to find an internal document anymore. You know, with the onset of the OCC giving federally chartered banks their blessing to custody digital assets, I believe over the next 30 or 45 days, you're going to begin to see, to an extent, some NDAs begin to potentially burn off with some of these banks that are about to take advantage of this opportunity that's in front of them. I also believe you're about to see banks interface with third-party companies that have platforms that are already available as a service platform for the customer and the bank, to allow the customer to buy and sell crypto through the third-party interface and or stable coins, and then custody those assets bought with the bank they've been using all along. I think this narrative is going to force a next big maturation process in the entire crypto space, because now exchanges are going to be met with an enormous challenge. They are going to be facing very, very big money with very, very big names and brand awareness that customers and the masses are used to because their money is already stored in those banks. I think this will end up creating a huge opportunity for mergers and acquisitions to take place, and this is another phase of a nascent, young, emerging market developing. What a time we live in to watch this happen. Remember that if you haven't seen the video from this morning, I really encourage you to go watch it. It's right here, the .com era of crypto. It's not if, it's not when, it's how big will this market actually get. That's not my speculation anymore. It's not us as YouTubers and podcasters and influencers on Twitter. This really is the question. It's how big will this space get? Because the banks really did get permission to custody digital assets. And it's not going to stop at that place. Oh, well, you just get to custody it like a safe deposit box for virtual currencies. No, that's not going to be the be-all, end-all of this situation. This is going to quickly bloom into DeFi, decentralized finance, which is lending of crypto, borrowing against your own crypto. All these different products and services that have been worked on and developed are about to be introduced as new services by very old name traditional banks. Thank you very much. They're going to come in. And here's the other part of the equation. And I think Digital Asset Investor said it best. Unfortunately, for those that were anti-bank, anti-government with crypto, I think the white flag has been waved. That dog don't hunt anymore. Because banks were just given the right to custody digital assets. I have said on this channel from the very beginning that the maturity of this space would involve regulation. And regulation would be exactly what would define this space and make it legitimate marketplace. The reason I have said that and stuck to that as a narrative of coverage and a point of interest on the channel is because I do agree with the maxis in the coin space, whether it's Bitcoin or others, that you cannot stop the technology. But I'll tell you what they can do, and I'll tell you what they are doing. You can regulate it right on out of existence if they don't like it. And right now, what you're witnessing unfold in front of you is the regulation rolling out, allowing the banks to get into this game. And because of that, you're going to create an even more trusted, legitimate marketplace with those traditional banks and names. And you're going to open it up to millions and millions and billions eventually of people who are going to feel more comfortable getting some digital assets from their bank that they've been a part of instead of some new exchange of some place that I don't know. This moment was going to come, and this moment is here. And I would imagine in the next month and a half, we'll begin to really see the marketing for some brand name banks to come off the sideline and show us that they've been ready to do this thing for quite a while. I have to say, I think we're moving into one amazing point, an inflection point in the crypto digital asset blockchain space. And this is just going to be remarkable. I really do believe that. Obviously, listen, if I were to get a permit to build a house, okay, you got the permit to build the house. But that doesn't mean I go home and there's a house built. I just have the permit that says I can build it. So the metaphor is that that's what we're looking at here with the OCC and the decision to allow banks to custody digital assets. Now, don't get it twisted. I believe the banks have been building their house to do exactly this for a long time. So I don't think it's going to take too long for them to roll out what their solutions and their new offerings and services and products will be. And what a time it's going to be. For the first time in history, we're about to witness the United States banking system offer digital assets and custody. Unbelievable. Which also tells me, by the way, the United States digital dollar can't be far away, because I can't imagine for a second that all of this fancy custodying of digital assets that's about to go on with the Banks of America, the PNCs, the Wells Fargos, the BB&Ts, the TD banks, all of these banks all across the country, I can't imagine for a second that all of this is going to happen without a brand new digital dollar to be able to get on and off that ramp with to do it. All right, guys, that's going to do it for me. I want to thank each and every one of you for listening. Hit the like and subscribe. Make sure you share with somebody you know. And also, guys, don't forget to check in the link description. You know, moving into a time like this and going through the Twitter hacks, we have seen a lot, and I do mean a lot, of hacks and a lot of scams. Please be careful out there. Pay attention to what you click onto. And if you haven't gotten a VPN, check out the description box or the comment section. I have a link that you can get a pure VPN, which will help protect your computer system at home from being hacked. I'm telling you, it's very, very important to take these kind of measures. And when it comes to security like this, there isn't any one of us out here, including myself, who now has it, that shouldn't have it, to protect yourself, your family, and your computer, and your investments. So make sure you check out the Pure VPN, guys. All right, that's going to do it for me. Guys, have a great weekend. Keep an eye out for the videos over the weekend, and I'll talk to you soon. Take care.